Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 4th, 2025, and we're diving into Wiley's second quarter earnings report for fiscal year 2026. Wiley, a global leader in research and learning, has just released their latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Wiley's performance, especially given their strong position in the research and AI sectors.
Revenue and profitability overview. Let's start with the top line. Wiley reported a net revenue of $422 million for the second quarter, which is a slight decrease from last year. However, their profitability metrics seem to tell a different story. John, can you elaborate on this?
Absolutely. While the revenue saw a minor decline, Wiley's operating income increased by 14% to $73 million, and their net income rose to $44.9 million. This improvement in profitability is largely due to their operational efficiencies and cost management strategies. Their adjusted EPS also saw a 12% increase to 1.10, indicating strong underlying performance.
Research and AI momentum. Wiley's research segment seems to be a significant driver of growth. Can you tell us more about the performance in this area?
Indeed, the research segment is thriving, with revenue up 6% to $279 million. This growth is driven by a 7% increase in research publishing, including $5 million from AI-related revenue. Wiley's strategic focus on AI is paying off, as evidenced by a $6 million content licensing project for AI model training. Their adjusted EBITDA for research also rose by 14%, showcasing robust demand and effective cost management.
Challenges in learning segment. On the flip side, Wiley's learning segment seems to be facing some challenges. What are the key issues here?
The learning segment reported a revenue decline of 11% to $143 million, with the professional segment down 16%, and the academic segment down 8%. This is primarily due to market-related softness, including inventory issues at online retailers and reduced consumer spending. Despite these challenges, Wiley's adjusted EBITDA margin for learning remains relatively strong at 40.1%.
Operational efficiencies and future outlook. Wiley seems to be making significant strides in operational efficiencies. Can you highlight some of their initiatives and future outlook?
Wiley has successfully reduced corporate expenses by 18%, thanks to restructuring efforts and disciplined expense management. They've also increased share repurchases by 69% to $21 million, with a dividend yield of around 3.9%. Additionally, they've utilized $120 million from divestiture proceeds to reduce debt, which is expected to further improve their financial position. Looking ahead, Wiley reaffirms its full-year outlook for adjusted EBITDA margin, adjusted EPS, and free cash flow, despite narrowing revenue guidance due to challenges in the learning segment.
Key takeaways. In summary, Wiley has delivered a solid performance in the second quarter of fiscal 2026, with strong growth in research and AI, despite challenges in the learning segment. Their focus on operational efficiencies and strategic initiatives is commendable. Thank you, John, for your insights.
Thank you for having me. Wiley's strategic focus and operational discipline position them well for future growth, especially in the research and AI sectors.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more in-depth financial analysis. We'd love to hear your thoughts on Wiley's performance in the comments below.